Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name is Patrick Dunawilla. I'm the editor of the Chart Report, and I'll be your host. Brian Lund is going to be joining us live in the studio to make sense of these markets. Brian is a trader and the founder of the Lund Loop. He's a no BS kind of guy, so it's going to be a fun conversation for sure. But before we talk to Brian, it's Friday, the markets are closed, so let's take a quick look at how this week played out. All right, so it was a mixed bag this week with two of the four major indices closing higher. The NASDAQ led by a wide margin, gaining nearly 6%, which was its best week since November. It outperformed the S&P 500 for 12 consecutive days now. On the other hand, small caps lagged by a decent margin, with the Russell 2000 falling nearly 3%. Taking a closer look at the S&P 500, it rose about 1.5% this week. We're continuing to chop around that 200-day moving average, and we closed slightly below it on Friday. Now, those December lows around 3,800 continue to be the line in the sand to the downside. Mega caps did a lot of the heavy lifting this week. If you look at the equal weight S&P 500 versus the cap-weighted version, this was the third worst week for the equally weighted version in the past 20 years. So it's definitely something to keep an eye on next week. Now, taking a quick look at sector performance, tech and communications led, gaining more than 5%, and they continue to be the year-to-date leaders. Now, everyone was focused on the weakness in financials this week, but the energy sector was the real laggard. It dropped nearly 7% as crude oil broke down to its lowest level in more than a year. Anyways, that's enough from me. Let's welcome Brian to the show. All right, Brian, wow. Welcome to this show, and thanks for coming into the studio today.
Thanks for having me. I hear I'm your second in-person guest ever.
Yep.
Some other loser named Linson.
Yeah, this Howard guy.
So whatever.
We let him on the show,
sure,
we let the strays
charity.
in.
I get it.
No, we set things up a little differently. We don't usually have people in here, as you said, but we're definitely getting our money's worth out of the studio today. And I don't know too many West Coast traders, so
right. We're rare.
We got to stick together,
Yeah.
And I got to ask you on that note, what do you think of trading West Coast hours? Like,
well, if you ask me now, I'm okay with it because I've been doing it for so long. I have kids, and once you have kids, you learn to get up early, and so I'm kind of an early morning person these days, but. When I started out back in the 80s and 90s, and when I was in my 20s and 30s, it was brutal.
Yeah.
Because, you go out and have fun, on a Wednesday night, and then you got to get up
6 a.m.
Or earlier than that, right?
Yeah.
I think I maybe missed 4 or 5 opens in my whole career. Ironically, one of them was 9/11, which was crazy. I woke up like an hour late and turned on the TV, and it took me like 15 minutes to actually process what was happening.
Right.
But most of the time, it hasn't been a problem, and certainly not in the last few years.
And it's nice being done early. You can get all your errands done after.
It's so good. In fact, I was at a Traders Expo a couple of years ago, and I ran into a trader who is in Hawaii.
Okay.
And they're done at 10 a.m.
Whoa.
Now you have to get up at 3.
I was going to say, they must have to start it.
They have like the best of both worlds, I guess.
Or
one world. I did the math one time, and I think I'm supposed to be in Saskatchewan. I think that's the exact right place for me in terms of when I would have to get up and when the day is done. Probably not moving to Saskatchewan.
Well, I'm kind of mixed on it. I do like being done early. But, not so much of a morning person, so sometimes it's tough. But.
And it's lonely out here because there's not that many traders. I mean, you find them more now that there's social media and everything. But other than maybe IBD, which is up in L.A., there's not a big presence of the industry out here.
Yeah. So. You and I have known each other for years, but for our viewers who don't, how did you get involved in the market?
Who doesn't know me, Patrick? Come on. Yeah, so way back in the day, they used to have these things called newspapers. They had these physical things made of paper, and they would deliver them at your door every morning. And they had sections, and there was a business section. As a kid, I was fascinated by the business section. I didn't know what it was about, and for those of you that are younger, they would actually print yesterday's, the
tickers,
or the
quotes.
final,
the quotes.
So I'd go through there, and I thought, this is a puzzle. And if I can figure this puzzle out, there's money to be made there. But back then there was no online trading. There was no, you just didn't have a lot of resources unless you were in the industry.
Yeah.
So I would follow the stock market. Finally, when I turned 18, I decided I was going to open up a brokerage account. Again, no online trading. So I went to Sears. Because back then, Sears had this idea where they were going to have a financial suite in their store. So they had like Allstate insurance.
What year was this?
This is 85, right?
Okay.
So 1 month after I turned, this is October of 85.
Before electronic trading.
Yeah, totally. And you had to actually be 18 to open an account, not like now where you can be like 13 and open a Robinhood account.
Yeah.
So I went to Sears, and back in the back, next to the Kenmore washers and the Craftsman tools, was a Dean Witter office. And so I walked up to the broker who was assigned that office that day. His name was Randall Woodworth. I swear to God.
Wow, what a name.
Yeah,
what a perfect name.
Goes by Randy these days. And I said I want to buy $300 worth of Altos computers.
Okay.
Wasn't really sure what they did. Figured it had to do with computers because that was in their name. But I'd seen them on a local cable access channel, and I thought, well, I'll try that. And so he says, call me back in 6 hours, and I'll tell you what price you got filled at. So that was my first entree into the world of trading.
Yeah.
And then in terms of technical analysis, about 7-8 years later, I was on one of the early bulletin board services called Prodigy. It was like an AOL. And they had different sections, like arts, entertainment, whatever. They had this one called Money Talk.
Okay.
So I got onto the Money Talk bulletin board, and there was something called TAOTN, Technical Analysis on the Net. And it was these really savvy technical analysis guys they were super old. They were like 30,
this is like
35.
Right? Like a message board?
Yeah, like a message board, right. And so I started, interacting with them and what's this technical analysis? And it made so much sense right off the bat because it was all based upon price and volume. It was very objective. Whereas before that, you would try to, get a value line, book and figure out what the PE was of a company and you're like, what? How I know? So that was the first time I ever got involved in technical analysis. And what's kind of interesting is even back then, we started having these meetups around the country. So we flew to Biloxi, Mississippi one year, where we went to Colorado another. So I was fortunate enough to find some really good, mentors and people that got me into technical analysis really early before it was as commonplace as it is now.
Yeah, I think the internet's done a lot to, and the fact that we have charting available, like you said, you used to have to go through the books and stuff or keep charts by hand.
Yeah, crazy, right?
Now we can rip through a bunch of tickers just like that, you know? So, you say your process is 80% technicals, 20% instinct. So what do you kind of mean by that?
So I rely on technicals for the majority of my decision making, but there are times there's edge cases. Like, for example, we've had a lot of volatility in the last couple weeks. So you might see a stock, let's say that it's very oversold, and it might not have gotten to a point technically where it's a buy, but you just based upon the number of years you've done it, think, well, this thing's ready for a reflex rally. So in that case, I might...
even sentiment, like, you're on Twitter a lot. When you see tons of bearish sentiment, that's kind of part of that gut instinct that you're talking about.
Or you have like your loser brother-in-law who never wins, and he calls and says, sell everything, and you go, I should probably think about buying.
Right.
So that's the gut part, and when I say gut, it doesn't mean you just go in and buy a position and that's it, right? What I mean is you kind of ease in a little bit, right? You take some probing positions so that if you're wrong, you don't get hurt really bad, but if you're right and the technicals do catch up, you have somewhat of a head start. So that's why I say it's about 20% gut.
Yeah, and I like that you don't shy away from that because, technicians and technical analysis is supposed to be objective, right?
Yeah.
That's supposed to be kind of, it can be subjective, but
we're human beings, right?
Right.
If someone says that they're non-emotional about trading, they're lying. The goal of technical analysis for me is to process those emotions, right? The fear, the greed, whatever is coming to you, but then have the half-life of it be so much shorter, right? Because you can rely on your technicals. Whereas before you'd say, I got to get in on this, and maybe for hours and days you'd be acting that way. Now it's like, okay, I acknowledge the emotion, but I can go to my technicals, I can kind of short circuit that a little bit and get it off my plate and then, go back to life.
And it's really more of a risk management tool than a prediction tool. And I think a lot
100%.
of people think that it's this prediction tool. It's really just, not just, it's a risk management tool, and that's really the value.
At the end of the day, I always want to try and focus on risk. And risk is only quantifiable really by technicals. You can't quantify it so much with your gut. But it is nice to have that little gear that you can switch into as long as you're watching the downside and not getting too carried away.
You know, you run a service called the Lund Loop. I think you started in 2017, 2018. So tell our viewers a little bit more about the Lund Loop.
Yeah, so the Lund Loop is really an outgrowth of a blog that I started back in 2007. I was trading full time. I found there was a lot of time when you shouldn't be doing anything.
Right.
So what am I going to do with my time? So I started blogging. Long story short, people started reading it, watching it, looking at it, whatever. And so in 2017, I took it to Substack. 2018, I flipped it to a paid service. And what it really is it's the work that I'm doing already for myself, right? It's going through hundreds of charts, looking at the setups, figuring out which ones I think are going to trigger, which ones I think are maybe a pass, and then managing them as they trigger into an active sequence. And so I took all that information, put it into basically a product, I guess you'd call it, which is the Lund Loop. Yeah. It's fairly lightweight, but it's very focused, right? I'm not going to talk about intermarket connectivity, right? That's what you guys do, right?
Yeah.
I'm just going to tell you, hey, here's a list of stocks that look like they've got a good chance of triggering and making you some money. In addition to that, we've got a pretty robust Discord community, which is great because since it's kind of a segmented community off of FinTwit, you don't get all that toxic stuff that we all battle with on FinTwit. And it's a great community for people to learn, share, and get better. And that's all we really want to do is just get better. So.
All right, well, let's talk markets because it's been a crazy couple weeks.
Yep.
We're recording this on Thursday, so the week isn't quite over. There's plenty of time left to, for stuff to go awry.
Big day in process.
Yeah, right. Big rebound today. Again, we never know how it closes, but it's been a choppy week for sure. But we are up more than 2% on the week, which, if you followed the headlines or if you were on FinTwit this weekend, you would never believe that.
Right.
Actually, my sister, God bless her, she texted me yesterday and said, are you holding up okay through all this bank crisis stuff? And I said, yeah, I'm doing great. I mean, I'm fine. The market's actually up slightly on the week. But I think it just kind of underscored the fact that, amid all this stuff, you really haven't seen, too much fallout yet, And I was thinking about it and I was trying to think, who was really hurt by this? Because it seems like, other than the bank CEOs who nobody feels bad for the bank CEOs, but who was really impacted by this? It seemed like everyone freaked out this weekend, and then the government came in and seemed to, at least throw a Band-Aid on it. But, the saga's still kind of unfolding. What sort of ripple effects or consequences do you think might come of this, or none at all?
So many things to unpack here. Yeah. I grew up in Southern California, right up the coast, and one of the things that you get as table stakes when you grow up in Southern California is earthquakes, right? Earthquakes come out of nowhere.
I haven't had one here yet.
You haven't had one, really? How long have you been here?
About 2 years.
Okay, you're due.
Yeah.
So they come out of nowhere. And then after the earthquake's done, you have aftershocks. You don't know how many you're going to have or how strong they're going to be. What we saw with the banking sector a week and a half ago with SIVB, that was the earthquake. Came out of nowhere. Nobody came into that week with Silicon Valley Bank going BK on their bingo cards. In fact, everyone was looking at, Jerome Powell was speaking that week. That's what they were looking at. So that's the big earthquake. Right now, we don't know what the aftershocks are. Because what's going to happen is you're going to see regulators, you're going to see politicians, you're going to see people in the government make changes, and those things don't happen overnight. So we're going to have to see. It's like when you work, I used to work in the broker-dealer side, and you have to deal with FINRA, which is the regulatory body. Now, FINRA really never tells you what you can or you can't do. They keep kind of a gray area. And when times are really good, when everyone's making money and stocks are at all-time high, that gray area expands a lot. But when you have like a Bernie Madoff situation, all of a sudden that contracts. And that's exactly where we're at right now. We don't know what the contraction will be in terms of regulations, how that will impact the financial industry. So it's kind of a wait and see. But what I would say is people have to understand the time frames here, because I see a lot of, especially traders, that are looking for short-term price action to signal that a long-term macro problem is solved. And that's just not how it works. So we still need to see how this thing plays out probably over the next few weeks and months.
Yeah, and I like that analogy to the earthquakes and the aftershocks. Yeah. And, like I said, it's still unfolding and we'll see. But you look at a chart of the financial sector and, that 30 level is really key. I mean, it was the top in 2007,
yep.
and then again in 2018, and then 2020, and here we are, testing it for the third time in the past year.
Yep.
So we'll see if it holds. But I mean, if it doesn't, to me that is basically all of post 2020 could be just a big fail breakout for financials, and that's scary.
And that's a much better looking chart than KRE, because if you look at the regional bank, that's ugly.
Yeah.
So there's going to have to be a lot of repair work done on that chart before we can settle in and feel confident. And people always ask me, well, how will I know that we've seen the bottom? And it's a stupid cliche answer, but it's a real answer. First of all, we capture the 8-day moving average, then the 21-day moving average, then the we incrementally see strength. We capture support and resistance levels.
Yeah.
We have minor pullbacks. We maybe rally a little bit, we pull back 25, 33%, then we rally again. So it will be an incremental process that will take place over time.
Now, are you talking about at the index level?
Yeah.
Well, let's move on to the indexes then. Because we have been kind of just chopping around the 200-day moving average for the long time, and you mentioned a process, and it seems like the last, call it 9 months, have been kind of a bottoming process, dare I say, because there are some positive things going on, but man, has it been tough to be a bull.
It has been tough to be a bull, but I think if you look at the big picture, how much bad news has been thrown at this market in the last since October, let's put it that way. And still we're pretty far off of that low that we saw. So if you throw everything in the kitchen sink at the market and you can't even take it down near that area, it tells me that the market's maybe more resilient than we think it is. And we always have to remember that the market is a forward discounting mechanism. It's always looking 12, 18, 24 months in advance. So what the market is doing right now is based upon what the smart money thinks the economy will be a year and a half, 2 years down the line. And we don't know that, obviously, but we just do know that they've tried to knock it down so much and they haven't been able to, and I think that's a good sign.
Yeah, I think that's a really good point. I mean, within the context of everything that's been thrown at it, the fact that it is, kind of holding up and it's right around the 200-day, that's, that's information right there, right?
100%.
Yeah. I know terms like bull market, bear market might not matter a lot to a trader like yourself, but I gotta ask you, gun to your head, do you think what we saw in October was the lows then?
Gun to my head, huh? Well, I'll tell you a story. So my daughter wanted to go to Knott's Scary Farm. So Knott's Berry Farm is an amusement park out here in Southern California.
Okay.
It's the red-haired stepchild of Disneyland.
Okay.
So they have this thing, they transform it in October from Knott's Berry Farm to Knott's Scary Farm. So she wanted to go with a friend.
It's like a haunted house?
Yeah, exactly.
Okay, cool.
But they have this rule now that if you're under 18, you have to have a parent, and the parent has to be in the park the whole time, right? So I took her and her friends. Of course, they don't want to hang out with me. So we went on, I think it was the 28th of October. It was after we had the big drop day. And they went off and did something for 6 hours. And I sat there in the Calico Saloon with my laptop, drank a beer. And I wrote this post that I put on the Lund Loop, and it was 9 reasons why we may have seen the market bottom this week. So I've been in the camp for a long time that, yes, we've seen the bottom. By the way, 3 of those reasons were Kramer crying on live TV.
I don't remember. What did he do?
You don't remember him crying? So he cried.
He
cried,
shed tears?
and I can't remember over what maybe it was just the low that we put in. Anyway, he cried, and it seemed to me like, okay, there's an extreme right there.
Yeah, right.
And I said, I think we've got the bottom in. There were some other things that I pointed to. Banks that were looking strong, financials were looking strong. There were a few other things. So I think, as I look at the charts right now, I still think that was the bottom. I think we've put the bottom in, but that doesn't mean we just go straight back up to the highs.
Right.
We could be in this sideways market for months. We could be in it for years, theoretically.
Right.
But it does feel to me like we probably put in a bottom. But who knows?
Again, gun to your head, what are you going to do?
We didn't see the type of capitulation move that I would like to see. I mean, we saw that big reversal day, which was, let me put my glasses on here, which was on the 13th of October. That was the day that we had this flush and a big green stick. We didn't see a massive volume increase, which I like to see, but you could probably argue that we've seen maybe mini capitulations before that. So, but I think...
Yeah, that was quite a candle. What was that, October 13th
13th,
or 12th?
yeah, yes,
okay,
yeah. But I would say 51%, gun to my head, we've seen the bottom.
Yeah. So I want to move on to a topic that I think kind of got overshadowed with all this banking crisis stuff this week, and I'm talking about the breakdown in energy stocks and crude oil. Last year, energy was the only sector that was positive, and we're kind of seeing sector performance kind of the mirror image of what last year was. You have tech and communications actually leading, which is notable, and energy is the worst performing sector, not financials, it's energy. So I'm wondering if you have any thoughts on energy or crude oil here. Do you think they'll kind of continue to be weak the rest of the year? Or?
So, I'm not a macro guy. So, I can talk about macro in this scenario or at a bar, but I don't really get into macro.
Right.
That being said, I think the obvious answer to that question people are throwing out there is they think that we're going to have a recession. And because we're going to have a recession, we're going to have a slowdown, and so there won't be as much need for energy. I'm not sure. That's sometimes the most obvious answer is not the right answer. Sometimes it is the right answer, but sometimes it's not. And so we go back to that discounting thing. Maybe that the move we've seen in the last year and a half, 2 years in energy has been that forward-looking thing where, yes, we're going to go into a recession, but now that it looks like we may actually be going into it, it's a sell the news type of thing.
Right.
From a technical standpoint, what I can tell you is that energy stocks, they make big moves. They're not really day trading vehicles. They're not even really swing trading vehicles. And you've seen them make this massive move, and a lot of them now are breaking below their 200-day moving average. More importantly than that, because we've seen a couple of them dip below the 200-day moving averages a couple times in the past few years, is that you're starting to see the short-term moving averages really start to turn down. Whereas before they might have been flat as it was coming in to test the 200-day. Now we're starting to see them cross over. So you're seeing the 8 cross over the 21 over the 50, and you're seeing that across the whole industry. So I feel like we've probably seen the top in that market. But again, that's just my non-macro take on it.
Yeah, and I think you mentioned that energy stocks tend to make big moves, right?
Big moves.
And it almost seems like they're due for one because, at least crude oil was really, really just coiling up the past few months and into a tight range. And, out of range contraction tends to come range expansion. And we're finally starting to see it resolve lower this week. So it'll be kind of interesting to see if that continues to
And
play
not only
out.
that, but what we saw before is we saw oil itself being weak, whereas like OIH, oil services, were still strong. They were at recent highs and still pushing that way. And we saw this last week, and last week a little bit. We've seen OIH actually implode, right? And confirm that move with oil. So when you see them both moving in the same direction, that's even more of a sign that maybe the big secular move is over.
You're saying like the leaders got shot kind of thing. That's
Something like
that's
that.
a red flag kind of thing.
Yeah,
that's a great point. But I want to move on to pot stocks.
Okay, my favorite subject.
I know. So
as a non-pot smoker, which is my favorite.
And here we are in California where it's
Crazy,
all over
right?
the place, right? You can't drive down the highway without seeing a billboard.
Never
for a
smoked pot,
dispensary.
never had a cup of coffee.
I
crazy.
can't believe
is that
the coffee
crazy?
thing.
I know.
Wow.
I'm a weirdo. I get it.
No, it's all good. So I always see you talking about pot stocks.
Yeah.
Obviously, you're usually poking fun at them.
Yep.
Because they've arguably been the worst area of the market. I mean, can you think of a worse, group of stocks than pot stocks?
They've been the worst for the longest. I mean, you could maybe make the case that SPACs in a shorter period of time, but no, I would agree with you.
And it was like there was so much hope and hype for them when they first came out with these ETFs and stuff, and you started seeing a lot of these come public, and it's been almost just a steady grind lower. I mean, we have MJ here. But and today we got
our friend Howard.
I saw a headline that Yellen said, from Janet Yellen of all people, saying that they were going to look to kind of ease back on some of the restrictions that they have for marijuana companies to bank with with the banks, because right now it's all it's all cash because it's still federally
Well, Yellen
illegal.
bakes. We know that. We know she gets baked, right?
But
look, I know the lingo, right? I've never done it, but I know the lingo at least, right?
Our buddy Howard joking that somebody's got to pay for the banking crisis somehow, so this is their way. But yeah, a lot of these ETFs just straight down. They had a pop initially, but then just steady bleed.
Yeah.
So do you think pot stocks will ever stop going down?
This is my pet peeve subject. When this story is written, whenever it's over, it's going to be very instructive for investors. So here's my framework of pot stocks. In 2018, I went to an event here on Coronado where there was a speaker that gave this glowing presentation about pot stocks. And I will admit, I was hooked. I'm like, wow, this is like going to be the biggest thing ever. And pot can cure psoriasis and fix your relationship with your wife, and it can do everything. It's amazing. It's amazing what pot can do. So I actually bought some pot stocks, and we all know the story since. I mean, they performed for a little while, but they've been in this relentless downtrend for the last 2.5 years. And what's been and what's been really interesting about it is how these pot permabulls, as I call them, have just dug in. They have never at any point made a mistake. There's nothing wrong with making a mistake. We all make mistakes. I probably make 3 mistakes trading today. I'll make 10 tomorrow. But that's what trading is, right?
Yeah.
But they have just dug in and said, no, just you wait. That's their philosophy, right? That's their investing and trading philosophy. Just you wait. And we've seen these stocks, well, I'll give you an example. Of the stocks that was in the deck of the person who presented, I think probably a half dozen don't even exist anymore. There were stocks like CanTrust, and I can't even remember what the other ones are. And then there's others like Aurora, which went down to like 70 cents, did a reverse 1-for-15 split so they could get back up, and are now back down at 70 cents.
Oh my gosh, even after that.
So the long-winded answer to your question, I think, is no matter what happens with safe banking, no matter what happens with legislation, it may be too late for the vast majority of pure play pot stocks. And what people don't understand is that a business can continue to operate while the stock goes away. So we may see this cyclical hell of reverse splits, of shelf offerings, of dilution. We've already seen that. And a lot of these stocks, even after today's announcement, they didn't do anything.
Yeah.
I mean, if you look at MSOS or MJ,
those should be up 10%. I mean, I think they're up
they should
2-3%,
be even more than that. But, and that's just because a lot of these stocks, a lot of these companies are zombie companies and will never ever recover. Now, some will, but it's just it's a real informative lesson for investors and traders. I don't have anything against somebody investing in a narrative, as long as the technicals support the narrative. And then when the technicals and the narrative, when they part, you have to go with the technicals. And if you don't go with the technicals, if you stick with the narrative, you have to at least be honest with yourself and say, okay, I'm not following any sort of risk management here. I am just, doing a lotto or doing a hopeful thing, which again, that's fine. But I think a lot of people confuse the two, and they think, I'm going to go into this for this reason, and then those reasons go away, and then they rationalize, well, I mean, look at what we saw during the whole pot implosion. Well, wait till this state legalizes it, and then wait till this state legalizes it, wait till this, and everyone's legal. I mean, who are we waiting for? Kentucky, Guam, like the U.S. Virgin Islands,
Utah.
Right. If New York and not Texas, but they're not legal yet. But if New York and California can't buoy that industry, then what are these other territories going to do?
Right. And it goes back to what you talked about at the top of the conversation of using technicals as a tool of risk management. Go ahead and trade that narrative if you want, but once your levels get hit, you got to obey, your risk plan basically.
Or be honest with yourself and say, I'm willing to lose all this. If you are, that's fine.
If you're trading the narrative, you're saying.
100%. Yeah. I mean, if this is money that you say, look, I'm not going to do anything with this. This is sit near the bush, all or nothing. That's fine. You just have to be honest with yourself. That's where we get in trouble. Is we self-deceive as not just traders and investors, but as human beings, right? So we should always be in a process of calling ourselves on our own, I don't know, can I swear here? On our own bullshit, right?
Yeah. Now, speaking of degenerate trades, we got to talk about crypto before you leave. Because it's
my other pet peeve.
Yeah, well, it's been kind of a bright spot this week. Here we are in the middle of a banking crisis, and you'd think the world was ending, but Bitcoin's up 11% on the week so far. The week's not even over yet, and it's up 50% just this year, you know, and we're not even 3 months into it yet.
Right.
And we broke out to a 9-month high, you know, a little closer view of it here. You can see there's kind of a base, a little bit of an inverted head and shoulders when we, you know, failed to break down below that 19,000, or we got below there and then we reclaimed it.
Yep.
And, you know, I really like those kind of false breakdown moves. They tend to lead to pretty sharp moves. But I'm wondering, you know, what your outlook is on Bitcoin. Do you think it's bottomed, and maybe what levels you're watching if you did?
So to make a point, I will say this to camera. I am a noted crypto skeptic. I believe that 99.9% of all crypto coins are going to zero. So having said that, right? So
I mean, I think there's more, you know, altcoins.
Yeah.
To not call them shitcoins.
Let's say, well, I already swore once, right?
Yeah, well, so there's more altcoins and there's more cryptocurrencies than there are stocks. Right. And there's a lot of stocks. There's a lot of junky stocks, right?
Right.
But that just blows my mind. I mean, how many, and they all have funny names and you know, but yeah, I'm sorry.
No, it's okay. So I think that the move that we've seen, particularly in Bitcoin and Ethereum this week, it feels like a very reactive move. Obviously, in reaction to the SIVB and the banking crisis, which to me, I don't understand, right? One of the reasons that people are going to get bailed out in this situation is because of government regulation. And so they think like, oh, I know, I'll go into the most no regulation area.
Right.
That makes more sense. I get it that it's an alternative to banking, but it doesn't, it seems like apples and oranges to me. So I think a lot of that is reactive, reflexive. And if you look at that chart, it's the February highs. We haven't been, as we sit here and record this now, Bitcoin and Ethereum have not been able to close and hold above those February highs.
Yeah, and thank you for saying that, because, you know,
tomorrow,
two hours from now.
I don't want to look stupid, so I got to quantify it too.
The way this thing moves, 2 hours from now, it could be totally different.
So I want to see it close above those February highs and base, like you said, like contraction before expansion. That would tell me, if we just see this spike, that tells me it could be very fast money. But if we can see something where it holds in bases and then starts to move up, then I would be more interested. But I think it's also instructive to look at all the other coins. Like you look at Cardano, you look at Solana, you look at Helium, you look at whoever. They're way below those February highs. And a lot of them are not far off of where this run started. So it's really only, as far as I can tell, Ethereum and Bitcoin that are showing the strength.
Yeah.
But again, I feel like Bitcoin and Ethereum and crypto protocols will have a utility in our lives going forward. But again, how we talked about a pot company can survive while the equity goes away, or a bank can survive and the equity goes away. You can have the utility survive, right? Become commoditized. But the speculative aspect of crypto go away. And I think we've seen that in the last year.
What do you think of, you know, it gets called digital gold sometimes, and, you know, it's kind of reacting to this banking crisis in a way that you would expect gold to, and now gold is also reacting positively. It's got a bid this week. But, you know, do you think it's kind of acting like that safe haven? Because at the same time, it's been fairly correlated to equities and the rest of risk assets, right? So
yeah, so I'm going to take off my trader hat here, and any asset only has value because we believe it has value. We know that, right? It doesn't matter whether it's the US dollar, a share of Apple, whether it's gold. I find it ironic that in a week and a half where people's perception of the value and the safety of a whole sector went away and has now come back somewhat thanks to the government, that people are going into a asset that is fully based upon people's, you know, how they feel and their belief, right? And so it seems like that's an industry that's an asset that's even more susceptible to a intellectual run. For some reason, something happens with the protocol of Bitcoin. They find out that you can actually duplicate something. How fast would everybody leave that? And you have no government or no entity to come back in and go, whether it's good or bad, we're going to safeguard it. So that's why I find this run into Bitcoin and crypto a little sketchy. And again, I feel like 99.9% of it's going to zero. So. Well, edit that out if that doesn't happen in 10 years from now or whenever.
Listen, we're definitely going to be talking about this thing in 10 years. I don't know what context that'll be, But, you know, I remember when this thing first broke out. In fact, I think it was at that same conference that you mentioned with the pot stocks.
That broke out?
Yeah, I'm pretty sure Bitcoin was just breaking 5,000. Because you remember Meltem?
Yes.
Had that awesome presentation where it had just broken 5,000 for the first time. And I remember Meltem got up there and said, I have 100% of my net worth in Bitcoin. And the whole room of investment professionals just gasped and were like, is this girl okay?
Yeah.
And she had the last laugh. I mean, she retired early. Yeah. She's not even like, maybe she's in her mid-30s, but.
And let me tell you this. So I was sitting at the bar, having a beer, watching Meltem do that. She was done, and I thought this poor gal. She doesn't know what she came over and
Jokes
I said,
on us.
I said, I really liked your presentation, and I did my trader thing. But you really got to be careful. You know, like you don't want to overcommit. And she was polite.
Mansplaining risk.
Right? I know, like mansplaining with a drink, and she was very polite. She's like, okay. I said, okay, well, that's good to know. Oh, I have to go over here. Right? And you're right. She did, but I want to make it clear that. Just because I'm negative on crypto doesn't mean that...
Well, you said you're skeptical, and I think that's the right word.
But it doesn't mean you can't trade it. I traded crypto. I've been very clear about this in my Discord. I sold my crypto holdings November 7th of 2021, which was pretty close to the top. I don't take any credit. It was probably a nice accident. But the thing that's always bothered me is people say, well, if you can chart it, you can trade it, right? If you're a trader. But I've never trusted the underlying mechanisms, these exchanges that they've traded on, and knock on wood, you know, I've been right in the last year, and we've seen the blow up in FTX and all these individual exchanges. Who knows what's going to happen with Binance? So that's what I'm more worried about. I'm more worried about counterparty risk than I am being able to trade it on a chart.
Listen, Brian, we got to wrap it up, but thank you so much for coming in today. We got to do this more often.
Thanks for having me down. It's nice to have a full studio just an hour and a half south of my house.
Oh, yeah. Well, safe travels back and have a great St. Patty's Day.
Thanks, buddy. Appreciate it.
Yeah, cheers. Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week. Thanks. Let's go get some tacos.
All right.